Mic check, mic check, mic check. Future, what it do?
What's going on, man? How you?
Man, I'm good. I'm trying to bring in a couple of more people.
Yo, what up, Casher? You can hear me?
Yeah, I can hear you, my man. Good.
What up, bro? How are you?
I am wonderful, man. I said we had a little price action today. I feel like I had some time. This be a good day for me to jump in and kind of show how I view these charts, man. So if y'all got an asset that y'all want to look at or some questions y'all want to ask,
Yes,
yep, let's
please.
let's just
Can
let's just do it.
So I want to talk about Flare because I was seeing a lot of different stuff, and I'm not sure if it's normal. I've experienced it on XDC also, but I mean, I'll let you dictate everything, and then I'll come up with my questions later.
All right, so first asset up the back, we're gonna take a look at this flare. Now, y'all know I start off on a weekly chart, obviously by how I use my 19 strategy. So I'm gonna take a quick look at the 19 here, and then we'll go to some little shorter time frames because as you can see, we don't have a whole lot of data here, right? So eventually, what we see here is opening asset back in April, right? Typical crash for an asset that just gets listed. And then we see right here in November of 23, we started our recovery, right? This was our first little indication that we were getting uptrend. We broke above the 19. If you see behind this, right, there's actually a 3 cross, that little white line. I'll zoom this up a little bit, make it more clear. We got the cross, which is adding momentum to the trend, right? And it danced around up over here on its next EMA as support, right? So I want to draw that out. And then we also got the next cross that gave us more momentum. So right now, this asset doesn't have a higher EMA than this one here. So we're pretty much in full bull, right? You're in total lineup 3, 11, 19, 38. And this is just full bull for Flare on this weekly time chart. Even your pullbacks are staying above your 3. Your 3 is still angling up, telling you over the next 3 weeks you could continue this trend. Your 11 weeks is telling you could continue the trend. 19 weeks telling you can continue the trend. So Flare is looking good, but I'm gonna jump down to a daily time frame. And if you have some questions, bro, go ahead. Did I lose him? Go check my
No, I'm
shit.
here.
No.
I'm here. You
Okay.
could. I heard you. I had it mic. I had I had it muted. I had to scroll down to get it. No, it looks good. I'm not sure if I have the 3 on mine. I think I'm viewing the 3 also. I wasn't sure that what color it is, but one question I did have, right? So obviously you stated it. This doesn't have a lot of longevity, so it doesn't have a lot of data points to go off of, right? So I was fluctuating in between the month and the day, right? And I saw some price action, right, on a lot of the charts, but a lot of my orders pulled at different numbers that didn't even show on a lot of these these like market cap, Coinbase, BitTrue, like a lot of the charts that they were showing where the current price was, I was getting them at different prices during that time. Is that standard? Because during that time, there's a bunch of different orders at different prices, and I just happened to get lucky and hit stuff that was out of the normal.
So I want to make sure I'm hearing your question correctly. So you were saying like you were charting it, and then when you went to look on the exchange that you were going to execute the trade, it was a different price.
Yes, yes. So I was looking at candles, right? And I'm like, okay, the high part of this candle is I'm seeing it was flare was going to like 5.6, right? 5.7, 5.8, and then I saw lows
That's what it
of like,
shows right
yeah,
here is 5.6. Yeah.
and then I saw lows of like 4.8, 4.7. So I put in some orders. I'm like, all right, I'm gonna sell if it ever gets to 5.6 a certain amount, and I'm gonna buy back if it ever does drop. And the crazy thing is that I was looking at the price, and I was looking at the price, and I even had indicators to alert me if the price rose. And at one moment, it stood at 49, but my triggers sold at 56. And I was just like, does that mean that one order came in right at the amount that I needed it, and it just wasn't big enough to make the number rise? Does that make sense? Am I saying it correctly?
Kinda. So I guess what I'm getting is you had a partial order filled on a limit order.
Yeah, the whole limit order went through at a
Yeah.
number, right? That was higher than what the exchanges were showing. Does that make sense?
Not really. I'm kind of confused.
Okay, so right, so I was looking at Flare, right, and I'm seeing this uptrend. I'm seeing this uptrend. I'm seeing this uptrend, and I'm looking at my goals. Like, okay, I want to sell a certain amount at this price because I'm also seeing that people are trying to buy lower also. So if I could sell high and buy low, and I'm looking at the monthly, I put certain numbers on that. So today I put in a sell at 5 cents, 5 6, right? So 5.6 cents, whatever that is, and it hit. But when I looked at the like Coin Market Cap and at Coinbase to see what the price was at that amount, it was still below 50. Like it was still at 5 cents. It wasn't at 5.6. So an order went through for me to sell higher than what the market price was, and then I was able to buy in at the market price since it was lower. So it's like
Got
a
you.
form of arbitrage, but I don't know if that's common because since the order book was so big and they had such a range that I hit those ranges. Does that make sense?
No, it does. I got you now. So yeah, it is pretty typical in that Coin Market Cap is going to show an aggregate of price across exchanges, and your trade was literally inside one exchange. So theoretically, in your exchange, right, Flare could have went to just say 6 cents, right? Coinbase could have still been having it at 480 until someone arbitraged that down, right? And so your order was able to be filled based on the liquidity that was in that exchange that you had the order on.
Got you. Understood. Thank you. I'll let you take it back because it happened to me also a couple of weeks ago with XDC where it pulled
Now, it's a
higher,
very
but the
good,
prices were lower.
yeah, it's a very good point because I want to highlight something on that, right? Um, you'll see as I work through this method, depending on how long we're on here, whatever, but how accurate the calls can be. But knowing a call and then executing a trade are two different things. And I always caution people that once you get comfortable finding the trends, right, and accurately identifying, your next challenge is to make sure that you get proficient in executing the trades. Because that is a different thing, right? So that was a good question, bro.
Thank you. I'll let you take it back.
Yeah, so I'm just gonna quickly keep on this flare for just 1 second and drop it down to the daily because as we seen, we didn't have a whole lot of information over there on the weekly, right? So if we come back over to the daily, it kind of tells a similar story, right? The asset got listed, dropped and found this bottom, right? And I'm gonna zoom in back on this little date, right? I'm gonna zoom back in on this date. But we see the same thing happening, right? Our first indicator of trend turning was here. Price got back above 19. We got the little 3 cross, 11 cross, and this thing worked up. But what I want y'all to kind of pay attention to, and a lot of people say, why do you have all these EMAs on the chart, right? Because as price is trying to recover, you notice how it's using the 19 as resistance until it broke through, right? That breakthrough was so strong that it came up in this area and started to use this EMA as resistance, right? So all of these EMAs tell a story. They're either resistance or support, depending on what's going on, right? So we saw here, it's starting to act as resistance. And then as it starts to test for support, you come down here and where is it grabbing support off of? Right on your 19, right? And then it just keeps on recovering the trend because we're above 19. These EMAs keep crossing, right? 3 keep crossing, 11 keep crossing. It's giving you all this momentum until Flare came up and tested this 100-day average, right? Rejected, lost a lot of that momentum to the point where you got crosses that almost changed your trend. It was so deep, but you know that it didn't change your trend. How? Because you see the 19 started rejecting off of these higher EMAs, right? So that got your momentum back. You got back above the 19, used your 100-day as resistance again, tested support back on your 19, right? Back on your 19, continued the trend on out until it crossed over that resistance of 100-day, broke out with both crosses, and that thing just took off, right? So even if we follow it in time, it took off. Now it's coming back, right? And it's testing the 19, right? But we see, if I zoom in here, what's really important to kind of notice is, and this is why I always have other EMAs up and not just price, the 3 started rejecting, it wouldn't even cross your 11, right? So it's telling you that all this sell pressure is waning, right? And as it failed to cross over the 9 and started going back up, all the momentum came back, right? Stayed above your 19, your momentum came back. And then when you started to lose it, and you can even see your 3 angling here, telling you that you're in like a 3-day trend. That 3-day trend eventually ends up angling your 11. So it's extending that trend until it actually broke the 19, came down, tested its support, and quickly grabbed it back, right? And so you're back into this uptrend that is just tested the 19 and continued all the way up to our current price action, which right now in the current price action, we did a little test off the 11, which is bullish, grabbed it back. Now we're testing right off our 3 and still holding bullish. So Flare is in an uptrend by the chart, literally.
Yeah, I'm excited. I'm excited. Thank you for that. I wanted to test some stuff out because, you know, I've always heard people say that even though an asset is in the uptrend, you can still accumulate the asset with whatever initial money you're going into. You know, so even though we're on an uptrend, you know, it's still beneficial to follow these skills. You know what I mean?
Absolutely, yeah. And if I go down to a shorter time frame, it'll kind of highlight those opportunities. So I'm just going to drop down, and then I'm going to try to take another question. But if I go down to the, let's say this 4 hour, and this thing been so bullish that I'm going to have to go back a little bit. We'll take a look. Let's take a look. Let's go back here. So
Yeah,
I'm going to look at this.
It's been difficult. It's just bullish.
Yeah, because it's just been so bullish, right? But I'm gonna take this time frame right here, and we'll take a look at this time frame, right? And I'm on a 4 hour because that's where I get the volatility in this asset. We saw what it was on a daily, right? But we pumped all the way up here, right? And then we started to lose that momentum. But we see here it lost the 19, right? So as it started losing the 19, testing these lower supports, starting to get your crosses. And always, right, like one of your better buy areas, unless this thing actually crosses down, is at these thick white lines, your 100. So this always kind of signifies your buy area, unless this 19 crosses. If that 19 crosses under, then this would have set new lows well up under the 100. But because it didn't, this 100 always identifies a good buy range. And I'm going to show that later. But yeah, to your point, right? You got some good opportunities of catching this momentum falling here, and we'll just put a rule on that, even though it's probably not a big return. But if you were looking to catch on some of these swings, right? You exited there when it broke past the 19. Even if you say your buy area is in the area of that white line, you could have picked up 5. If you're greedy, right, you could have picked up maybe a good 7. And then rode it up to see if it'll reject. Here's an interesting thing I'll show you here, but I hate doing this. This is why I don't day trade. But literally, if you got the time and patience, that 5%, you can actually run out to a lot more than 5, right? Because you're exiting here, right? And let's just say you buy in this white line zone where it recovers. You get another chance, right? If it rejects off of this 19 to just recoup more. So let's say you did catch this right here on this fall off and grabbed you 6%, right? Well, we see the next exit is coming up basically right here. So now you've already gained 6%. You grab this, and if you buy in your white line area again, pick up another 4%. And look how many times this asset is going to give you a chance to grab 5%, 4%, 5, even probably, 6, 7% here. So you get a lot of opportunities to pick up gains for somebody who wants to do this. This is just too much trading for me.
No, I feel you. That's why I brought up the what I said in the beginning, because I don't do the day trading. I just look at the week and the month, and then I kind of just see maybe what the 3 and the 4 hour look in the moment, and then I just take some hypothetical guesses, right? And then sometimes they hit, sometimes they don't. There's been times when I put a sell price 1 penny above where it actually hits, and then I put a buy price like pennies below like the bottom of the candle, and I'm just sitting there like, I shouldn't have been so greedy. I would have scooped up a smaller percentage, but I would have got something, you know. But at the end of the day, like that's what this is. We're fishing, you know. We're using our skills, trying to see what we can catch.
Yes, sir. Let me take a look at this stream and see. I'm gonna try to get I'm gonna get this other brother in here, brother XRP, and then I'm gonna see if Future got a question because he's been patient. So you got something, Future?
No. My question was, I'm just listening and learning. I was wondering whether or not you were doing day trading, and then I was gonna ask how that relates to, like, if you're doing the trading, how you tax that off, or what the taxes on that is. But all good. You could keep going with the charts.
Yeah. I generally don't touch tax questions because that comes out very complex and probably best handled by tax people.
I got you.
Yeah, and I really don't day trade personally. I'm just trying to show that with this strategy, someone could if they wanted to. But my preferred trading is here on this weekly chart. So I'm using Bitcoin now as an example. And I'm basically trading every pass of the 19. So if I go back in time, I can see here where we broke past the 19, right? And this is where I want to exit at and get these moves. And notice again, your buy zone as close as you can get to this thick white line, right? Always. And then I know y'all looking here, and I'm going to explain that. But first thing you notice, you get this good buy area here. Price recovered, of course, right? So if you bought here, you were just looking for a rejection here. But since it didn't reject, you stayed in it. It lost it again, and this became a great grab, right? So if I put the ruler on this and we see you exit here and you're, my screen tripping. You're down at, 50% pickup, right? Before this thing starts to ever test your 19 again, right? But we clearly also can see, and this is why it's important, where the market recovered. So back in January, right, 23, we saw this thing recover the uptrend, used it as support, broke through its 100, retested, right, came back above. This retest was kind of deep, and everybody in the market was kind of scared at this moment, if we remember this time. But it kind of dipped right under 100, right, which is kind of ill-advised. But what we also notice is, and this is important, the 19 never crosses back. So once we had this 19 on a weekly chart cross back over this 100, that signified the bull market. This was the uptrend. This was the beginning of the bull market, right? And so we noticed that the 19 never crossed back under, because that would have killed the bull market, right? That would have been the end of it. We would have been back in bear market. But since we were still in a bull market, right, soon as price recovered, you got your crosses, bam, we went all bull to right where we're at today. And while everybody else is panicking, oh, you think that pullback was et cetera, it didn't even pull back to test the 3, much less the 9, much less the 19. And this is a full bullish pattern. And the reason you know that is because all of these are in order. So from 3, 11, 19, 38, 48, 58, 60, 100, right? So that's full bull right now. Now I'm just going to quickly go over to the monthly, because I said your best buy areas are always at this white line, right? And I know everybody's like, wow, that's well under the white line. What you would look for once you get into this area, right, particularly with these crosses happening, is you need to just go up to the monthly. So I'm going to show y'all some magic here. And I go over to the monthly. What we got here? Why is this? Hold on, let me try my regular chart, because this chart ain't the one I'm used to looking at. It ain't got all the data. Hold on. Bitcoin. Oh yeah. So now, right, we see on the monthly chart when we lost that 19, what I say, the buyer is always at your thick white line, right? This is 100 weeks. So always pretty consistent. And I can show that across many different assets. So works great. And everything else is pretty typical here on this monthly chart, right? Because it is what it is. You see your trends, you got back in your trend, you got back in your full bull lineup, 3, 11, 19, 38, etc., right? So the market is looking just extremely bullish right now for the people who are anxious. I'm gonna go ahead and take another question. See, my guy Crypto Red Eye was here and got I don't know what happened, so I hope you make it back. Brother XRP, you got a question?
No, I don't. I'm just enjoying your knowledge real quick, just trying to learn so I could do, you know what I mean, on a smaller scale what you're teaching. That's it, brother. I appreciate your knowledge, man.
No doubt, man. I'm just trying to share. So yeah, it's all predicated on, again, I'm a weekly chart. So again, here's an important thing to notice, right? That I think for me is important. As I said, it doesn't pass these 19 on the weeklies that often, right? So if you're counting the trades you have here, we'll just kind of count them, right? So you know you traded out here, right? You didn't have another trade until here. So that's 2, 3, 4, 5, 6, 7, 8. I'll just count this 9, 10, 11. You had 11 trades that you would have took going all the way back to November of 21. So there's no need to be trading daily, right, to make the most efficient trades. Now, I say most efficient in that my method doesn't catch tops. So a lot of people are like, well, you didn't get out at, this number, right? I'm not really interested in getting out at tops because nothing here tells me if this thing is going to bounce and continue and go on to 100,000. I just don't know, right? Same thing here. We had set a new all-time high, right? Could have collapsed and went all the way down, but yet it bounced and went on to set a new all-time high within this term. So all I can play is this 19. And when 19 goes out, you pick up more Bitcoin. Even if you wait till the recovery, you gain more purchasing power. You exit here, right? You gain a whole lot of free Bitcoin. And it's just cycling back, making sure that you're just trading every time this thing passes. Now, because you're on a weekly chart, this daily pass here might have passed 3 times within a day, right? Even though on the weekly chart, it's showing like 1 week that it was showing you price action. It could have actually passed 3 or 4 times within that day. So you will have to have some discipline to say, damn, man, it moved back up and moved back down and moved back up. But you're paying small little trading fees to do that ultimately pay off. And in this case, picking up 50% more Bitcoin for free. I'm going to jump down to a smaller time frame here on Bitcoin just to kind of show y'all something as well. So where is mine?
So I had a question, Casa. So do you set a purchase order or a limit order on like when to purchase it at a lower scale or no?
Yes, absolutely. So what I'm basically doing, like right now with price and Bitcoin being, I'm in multiple trades. So I'm in an XRP trade as well as playing the dollar. But with Bitcoin being, and I'm back on the 15 minutes. So damn, let me go back. Let me go back to the weekly first and answer your question. So because I'm a weekly player of this move, I have alerts actually in these areas alerting me that like it's going to hit the 11 and I need to start paying attention, right? Or it could be falling fast, right? And hit my alert so that I know to start paying attention. My limit orders are set for this area, which is 43.65. I know that, and if I zoom in, it's probably not the accurate price. So let me just give you a real down to the detail price. My sell limit orders are probably right here in this range of 43.623. So that if anything happens, right, at least I'm out when it breaks under 43.623. Now, the thing is, once it breaks that, I got to be prepared that it bounces and goes back above real fast. So if that happens, I need to be back in at least, 43.94, close as I can get, 43.88, right? So I always got to be prepared for that bounce. But ultimately, I know that if it stays under, then I'm getting ready to pick up something down towards this white line.
Got you. Good to know. Thank you.
Yeah, absolutely. I'm gonna go back to this shorter time frame here, just show y'all how today's price action kind of went. So as we were making this move today and everybody's kind of trying to figure out what's going on, today started here. So we see Bitcoin started this run up. It did a little test on the 11, continue this run. And this is on this 30-minute chart, right? And we see here, it came down, right? That 3 basically caught support right on the 19 and then continue this trend. So even though price dipped a little bit under 19 on this 30-minute chart, its lowest support that it started testing was here and recovered. So right now, as we stand in this very moment, right, it's still in this bullish, but this would concern me, right? And why? Because this is a 3, and it's telling me that for every 30 minutes, which is an hour and a half, we can expect a little downtrend to continue. Now we see that it flattens out at 11. So if you took 11 times 30 minutes, it should catch support. But if it doesn't, right, then that 11, or if this price loses this 11, as we're looking at it now in real time, the 11 will start to go down, and then we can estimate 11 times 30 minutes, right, that might continue. So it does help you kind of estimate time as well if you can visualize that. Here's another example, right? So did the breakout, ran, caught your support right here on the 19, continue to go on to set this little local high that we're dealing with. We saw this momentum come out. Your EMA start to angle down. You lost your 19, so this was a perfect opportunity to pick up and buy right to your thick white line, right? Notice that this shit never changes. Caught up at your thick white line and look for a rejection. There's your rejection here. You could have picked up some more. And this is all today, right? Could have picked up you some more Bitcoin, got back in. It's running back up now, and it's threatening to potentially lose it again, where you could pick up more Bitcoin possibly down here by the thick white line. Now, when this shit goes south, right, and it goes below that white line, I'm going to try to find one of those examples just real quick. Let's go back in time and then zoom back up. So here's kind of like if you think about this moment in time of being where we're really at, right? And you start losing that momentum. As I said, you get opportunities to buy at the thick white line. But if you see, as I said before, yellow crossover white line, then you know that this bad boy is going much deeper. And that's your big signal to basically make sure that you re-exit again, and voila, right? And then your same recovery back above the 19, cross back, and then voila, back to the upside. So one thing I'm gonna just quickly cover for some of y'all who may be new to me talking about this 19 thing is it's not just something that works for crypto. So I can literally go over to the Dow Jones, right? And I'm gonna get off this 15-minute shit though. And let's go back to a weekly. And this really has so much chart history. I should be on a monthly, but we'll stay here for a second. But again, this is the Dow Jones, has nothing to do with crypto. Same dynamics. Your crosses back above your 100, right? Recovering your trend, clear uptrend and get your gains. You lose the momentum when you lose the 19. Buy area, tried to defend at your thick white line, lost it, as I said, opportunity to catch deeper, recovered with crosses, and it just goes on. You had a little dip moment here, lost your 19, buy at the white line, get your recovery, and back to all-time high. So it doesn't matter really, and it's more clear if I go to a monthly because these charts have so much data. But if I just give y'all a quick visual on the monthly, it gets even clearer. So just marching along on its uptrend, you lose the 19, buy at the white line, recovers, crosses, all-time high, loses the 19, make you some money on the short, back above because your 3 is back above, 11 is back above, everything's back above, and back to all-time high for your Dow Jones. Doesn't matter what asset or what time frame, like this method will work for literally anything. If I go over to gold, you see the similar patterns. We go back here, got back above, buy area at your thick white line as always, right? Got back above, trended up. Your 3 came down, your price came down, tested your 19, let you know we were still trying to hold on, went back up, and then it all lost here. Didn't quite go down to your white line here, but you at least got you a good buy opportunity at that second to the last EMA, which it tapped right on it, recovers and does this quick little fake out back above, and now it's back at almost all-time high for gold. So there's not an asset that this won't work for on any time frame. And to me, that's why I started calling it a cheat code, because I can literally cheat code this market with this method. I'm getting New York back in here. Sorry about that, man. I'll be talking. I can't look at the screen at the same time, so take me a while to get you back.
No, you're good. The only reason why I wrote in the chat was because I was talking to myself. I was like, Castro, can you hear me?
So, man, I thank y'all for coming in. Again, if y'all have any questions, feel free to ask. But it took me years to kind of like figure this stuff out completely on my own, but it works like a charm. Here again, you have your moment. Gold lost to 19, came right down, textbook buy at your thick white line. Like there doesn't get more of a cheat code than this, and it's simple. Anybody could do it. And it's crazy because if I zoom out even further, because gold has been trading so long, I'll show y'all something amazing. But this chart is literally going back to, 50s and 60s, and the same trend has always existed ever, right? So if somebody can explain to me why this method has literally worked before any of us in here were born, I would really like an explanation. But same shit is happening, right? Let's just zoom in more. So and this is kind of when price action really, I guess when we went on the gold standard 71. So here we go in 71 going into the gold standard. It gets under this thick white line, which tells you you're undervalued. Got above the 19 and caught momentum and rode this 9 to 11 as support all the way up. Caught support again on your 911 that it still had juice in it, right? And it rode it all up. We got a 19 support that we still got action and rode it back up, right? And gold just came around and did its thing until right here about in let's just see where we at. In 1975, it lost its 19, went down, buy at your thick white line. So I know there's a few people here listening, and I want an explanation of why I'm going back to the 70s, and this very same pattern is consistent for over 50 years. Somebody please explain that to me.
What is it? Men lie, women lie, numbers don't?
You already know, man. You already know. That's why I try to tune out the noise. So people hear me talking in spaces a lot of times. And I don't know, maybe they hear me, maybe they don't. But I'm like, at the end of the day, yes, I follow Ripple, right? They're doing amazing things in the space, changing the world, saving people money, creating the internet of value. All that shit's very interesting. But when it comes to making your money, the numbers don't lie. You can make a lot of mistakes and assumptions on what somebody's going to be able to accomplish and how fast they're going to be able to accomplish it and who's ETF and what ETF and all of those narratives. But men lie, women lie, numbers don't. So if you just trust this, right, you should be good. And this is how I've been able to bring a lot of people into crypto, right? Because again, you can bet on a lot of things, but when you have a 15-year trend, right, that basically says all you have to do is come into this market with the proper expectations, then you should always be able to make you some good money. And the math of this tells you that all you have to do is be patient, right? So if we're going back here, right, this was one of Bitcoin's first bull runs, was yielding. Let's just zoom in on it. I don't even have to be in a hurry. So we're going to look at it. One of Bitcoin's first bull runs from this charting information was in this range, and we'll put it on the needle, right? So it started here. We're going to catch it and then drag it up to this just local top because we see it continued, but we're just going to take it from this one. And that was one hell of a fucking return, right? 8,285%, right? So this is essentially 2014. I got to get this out the way. Excuse me, y'all. This little top that is set here was in 2013, and then we're just going to move forward in time, right? So 2013 takes us to this area, which is basically, we'll just call that January of 18. So 13, 14, 15, 16, 17, 18. You had a nice little spread there, right? 5 years, but you got right back into humongous returns, right? We look from 18, right? And we see the dips, right? It loses 50%, 60%, whatever it does, 70%. But we go from 18, right, over here in this area, 21, so it's 19, 20, 21. Essentially 3 years later, we were, or even if we slide over here, we were back at another run, yielding returns. And we know that this noise comes in, but again, 21, 22, 23, 24, and right on schedule, 3 years later, we're back in this same situation. So when you tell it, if you're trying to bring people in this space, sometimes it's just like we have a 15-year trend here of saying that if you buy these lows, right? And how do you know that it's a low? Because it's at its highest numerical EMA. So all you need to be doing is prepared to dump whatever money you can gather up responsibly in at these lows and then ride it, right? And when it loses the 19, you know to get out and to buy back at your next highest EMA. And you run it. And when this thing gets ready to lose this next little, even if it goes up to $100,000, $125,000, $150,000, right? I know that I'm going to be looking to buy back wherever this white line gets drug up to. So let's say it gets drug up to 40,000, 50,000. I'll be looking to buy back when price hits this white line. And we can do this consistently until this trend ever breaks. But for now, it's a 15-year trend that I think is about the easiest thing to help manage your portfolio.
Cashto, would you be willing to show us how to set up a EMA or a multi-EMA?
I was
Yeah,
just
that's a
about
good-
to ask that same question because I know I messaged you yesterday, Cass, and I appreciate you taking your time out. You know what I mean?
So
But
definitely let me go through that because I have been getting a lot of questions about how to set this up yourself. So essentially what you want to do is you want to be, on your chart where we are now, right? And then your indicators are indicated by the top screen where I'm hitting indicator. So you would type in MULTI, right? EMA, and it's going to give you a list of different options. The one that I'm using, let's see if I can find it very easy because there's many of them. Maybe it's just best to type it all out to find it easier. So it's MUL or something like that. What is it? See it here? So if you type out kind of the full name of it with the guy who created this thing, it pops up pretty quick. So the one that you're looking for is this one, Multi EMA, and it'll say 2050 100 by Mullinger or whatever his name is. And what you have to do is tap this twice. Once you tap it twice, it'll put two of these EMA on your screen, and they'll look like this over here on this left side. If y'all see where I'm pointing to, you'll have two of these. They won't come up with the right numbers in them, so you'll have to set these yourself. So the way that you would do that is you hover over the EMA, and then this pops up. The first one lets you hide them in case you don't want to see them. So this is why is this one not popping up? There we go. Get up here. If you just want to hide them and look at a naked screen, you can always do that. Bring them back like this. And then when you want to change them to the setup numbers, you hit the little setting one that's next to the eye, and you get this screen. So once you see this screen, you go to the input tab, and this allows you to put your values in, right? So I'm using the 3, the 9, and the 19, right? And then if I go to the other one, we can see the rest of the algorithm. And so this one will be 30, 48, 52, 65, and 100, right? So this is how you set up your values. And then because I'm colorblind and I need to be able to see all these things very distinctively, I make each one of them a different color. So changing the color is this tab, and then the opaqueness of the opacity, right, of the color, you want that dark, and then however thick you want your lines. So of course my 100 is this very thick line. I use a very thin line for the 3 since they're the same color. and I always use a pretty thick line to indicate my 19 because I want it to stand out. And so, yeah, that's pretty much how you would set up your own chart to look like this. Is you just need to write these numbers down. Your 3. You can play with these. They don't have to necessarily be exact, so that you can get your own style if you want to. I just work with these, and most of the one that I'll change from time to time is this 9, but sometimes I actually will use an 11. A lot of these I don't change much. The 100, you see, I'm actually at like 108, and here's one thing that I play with, and we'll work with this right quick. The reason it's on 108 because I want to grab the longest data that I can, right? And so if I were to put in, say, 120, right, and let's put 120 in, you see it drops a little bit, right? So I've kind of found the sweet spot at this 108. But in some cases, like if you're looking at the Dow Jones and some of those things that have a lot longer price history, you may even want to just, leave this at 108 since it's kind of like been tested through time to be a good little sweet spot, and then just bring up, say, a 200, right? And because there's more data, and that 200 in some cases might give you, a buy area that on a monthly chart, right? Or let's say a weekly chart, excuse me, because this one usually works on your monthly chart. But on your weekly chart, that 200 might have popped up, and it might have been down here in that range to pick up that buy area. So these have just been tested the time and by me, and that's why I use them. So, just a general rule of thumb, but that should help you set up your chart. And then all you have to do is keep it up. And whenever you're cycling through any asset that you personally want to look at, you just cycle through the asset and it'll stay there. So like we see Ethereum, classic, break above the 19 with crosses, went on, lost it, buy at its lowest support and back above. Like, doesn't matter which asset. You can trade anything with this.
And these settings also apply for your mobile device, right?
Yeah, so 2 things. I was lazy and been using my mobile browser and just recently started using the app. And one thing I will say is the TradingView app gives you a lot better viewing experience. The tools may be a little harder to kind of get to because they're not so easily viewable from the home screen like this. But yeah, you can use both the browser as well as the actual TradingView app. Here's Cardano. We see Cardano recovered back here in October. Went on. I'll show y'all something interesting a lot of people don't talk about. I'm going to run through some of these altcoins, and we're going to look at a pattern here, right? Notice that these recoveries, right, because they were all setting their lows right here, and recovery time was October, right, of 23. So let's just cycle through a few of these assets right quick. Right now we're on ADA. We go over here to BNB, but guess what? Same time frame, October, right? Recover. Let's go to Litecoin. Litecoin still yet to recover, so that's not a good example. But here's a good way you could tell like the health of these assets. Like everybody's talking about some of these other ones, but I guess we could go back here and say it was trying to recover back in October 22, rejected off of its 100, tried to get above it. We saw how weak this attempt to break the 100 is, and can anybody guess how we know that it was weak? Anybody?
Because it was below, if I'm assuming.
Not just because it was below, but because we see this 3 never tipped above. Even though price started breaking above, we can see those wicks. See how the 3 rejected off the 100.
So quick question. That 3, is that a day? Is that these are days, right? These lines equal days?
No, because we're on a weekly chart, that 3 is indicating 3 weeks.
Oh.
So here's an important thing that I was talking about earlier. Here's an important thing that I was talking about earlier. So when you know that it's 3 weeks, when it starts to go down here, you can kind of count this candle or this one. But if you start to kind of look in this area, you just start to angle down here. So let's count 1, 2, 3 weeks, right? And guess what happens? You got a recovery. Because your 9 never started going down, right? You just got your recovery. Now over here, your 3 starts going back up. And so you can kind of start counting your up weeks. 1, 2, 3, right? But your 9 still kind of going up. So you're continuing this 4, 5. But guess what happens? Your 3 angles back down. So count them again. 1, 2, 3, right? You kind of come down here to 4, and then you get a recovery. So it's not going to be exact, but it's a great estimator, right? And you can just work right through this as it does the same thing. Even over here, we had this 3 weeks, right? But guess what started happening? 11 turned down, 19 turned down, right? And you didn't get any kind of flat action till out here at about the number, we'll just say that's 38, right? So now let's go back here and count how many weeks we had. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32. So again, this 38 ain't exact. If I was to bring it down to 32, right, it probably would have told me exactly where I could have started expecting this downtrend to lose some momentum. Because although I was counting all of these telling me 19 weeks, right, of downtrend, we noticed that it flattened out right here at 38. And so it can estimate time. It's another great thing that these EMAs do. And it's crazy because so many people have told me, oh, well, EMAs are only lagging indicators. They only tell you about the past. The past is very relevant, as I should have been able to demonstrate as I went through this with you all.
Appreciate you, Pastor. Can you throw up the XDC chart real quick?
XDC, yeah, it's another interesting. I'm glad you asked that, bro. Real interesting.
Don't talk to me about XDC, bro, because I don't even know how to deal with it, man. Like, I rode that bull run all the way to 20. I sold that. I just want to see what's up.
But let's check this out, right? So we saw this thing starting to recover here, but right at the same time that XRP was winning its case, this thing went into its bull market, right? We got the 19 back above the 100. We got the crosses, and it took off. So it went into a bull market earlier than most of the altcoins, actually in time with XRP when it made its move. The only troubling thing is we see that it has lost it. And what I would be looking for right now with XDC, since you asked about XDC, is my rule is 19 should not cross back over this 100. Otherwise, this thing would be saying it lost a bull run while everybody else is in a bull run. So this 19 crossing over this 100 would signal I wouldn't want to be nowhere near XDC. And your real exit, right, was really back here at about 05, right, because it lost the 19. But if you have an exit already and you see this thing here cross over this 100, I wouldn't want to be anywhere near XDC. But what it's also telling me is that we may be getting ready to inch up on a recovery, because if this 19 literally touches this white line and bounces and recoveries, that's what should happen unless something is wrong with XDC. So XDC is in a very funny situation right now where it could cross and fall apart, or it can actually bounce off of this 100, this 19 I'm talking about, could bounce off this 100 and continue being part of the bull market with the rest of the assets. But it's one of the only ones that's kind of showing this, which is very interesting. And I'm gonna contrast that with XRP because I want y'all to see that the same thing happened with XRP, right? So we had that July breakout because of the case, right? Where the rest of the market didn't do what? Didn't do this until October. But guess what? XRP recovered at the very same time as the rest of the market. So for me, this time frame between July and October was an anomaly because XRP wasn't supposed to start its bull run until October with the rest of the market. This just happened because of the case. But here's the important thing and what I was saying about the market, and that the 19 came down, touched the 100, and booyah. So I'm looking for XDC to do this, right? That we're seeing right here in this area. And if it don't, then you know it's doomed. So good question on that XDC.
Now, Kasha, by any chance, do you compare any of your charts with like Bitcoin just to see if it's going to do an uptrend? As Bitcoin is usually like the leader of the market per se?
I love these great questions. So here's another thing I've been preaching, and you can see I got my targets, everything already on my chart. So I'm not a tribalistic person, and I happen to like Bitcoin too, right? So for me, right, I knew to move some of my XRP holdings to Bitcoin when Bitcoin lost its 19, right? So again, it tried a recovery. My last exit was here back in November of 23. And I have had a significant portion of my XRP in Bitcoin, so that my XRP is actually since November gained me essentially 40% more Bitcoin, 50% more Bitcoin. My target is this line, and I feel like I tapped it by how close we are here. So I've been trying to make a decision where I want to switch everything back, because this was my target here, and I have yet to do so. So now I'm kind of judging, should I wait for an actual hit on my target, or should I call that a hit and we're already recovering? So here's where I'm kind of making that decision. And I'll kind of go back in here and look. So there's nothing really here to tell me except for a exact hit, and then I would absolutely make it, right? If I'm just going to kind of wait patiently, I guess what I at least have to wait for is a break back above this 9, right, to give me some confluence that it does have some recovery in it. So right now I'm looking for either recovery over this 9, which I will lose some returns waiting on it here, or I can get a flat hit on this and just call it. So this is kind of how I'm playing the market right now. But absolutely, you do need to look at these assets to Bitcoin, because again, you know, this is telling you a different whole story, that you should have been out and picking up more XRP off the price appreciation of Bitcoin back in November.
All right, Cash, a crazy question. Now, somebody that's just getting into it, I know you stated before, you know, every check put 15% into it. You put 15% dollar cost average in and stuff like that. You just do, as you're looking at the charts, you know, you're doing it when it's low, and that's essentially what you're doing. I'm assuming, correct?
Whoa, the dollar cost averaging question opens up another big can of worms. One of my mentors who really brought me into crypto really taught me the dollar cost averaging strategy. And he used to tell me all the time that dollar cost averaging is technically when you only buy in regular intervals, regardless of price. So if you're timing price, you're not really technically dollar cost averaging in, but you are dollar cost averaging in, if that makes any sense, right? And so you do have decisions that you have to make. And so I'm gonna kind of run through those decisions right quick. So if you're sitting here at a bottom and you're saying, I'm gonna buy every 2 weeks, right? Well, you can count these candles and say, okay, if I bought here 1-2 weeks, I'm paying a higher price, right? 1-2 weeks, kind of general price. And price just keeps going up. And you're like, damn, I'm paying more and more for these assets, right? And a lot of people don't like doing that, right? And so you kind of have to judge, you know, in that instance, it's not really a bad thing, because price is going up and every buy is still gaining a return. So ultimately, it's not that bad. The only thing is I would caution that at some point you need to be looking for, if you lose a 19, and then protect all of those dollar cost entries, right, by getting out when it loses the 19. So that's that side of it, right? When price is going up. Now, when price is going down, people are like, okay, I'm getting a better price every time I go down, right? But they feel like, why can't I just wait and buy it all here, right? And so then is it like, am I adding every 2 weeks, right? Or then am I starting to time the market and say, I just want to buy at this lower prices when it gets down here? So if you know how to find this bottom, then maybe you do want to wait. If not, you're just going to get more of the asset as price goes down, and it's really not a, you know, horrible thing. But you just kind of have to make some personal decisions what you're comfortable with.
All right, I appreciate that, Cash. The other question would be, would you just purchase, if you are dollar cost averaging, either Bitcoin, XRP, whatever coin, would you just focus on one, even though you're looking at a few others?
I would say that every portfolio should be diversified. And what I mean by that is you should have a long-term strategy to be accumulating those assets that you've identified. Once you do that, I would dollar cost into the percentage allocations that you have identified for yourself. So if you pick 3 assets and you're saying I'm taking 10% of my check, splitting my check in thirds, then you're just going to put that in each time, right? That's just one way of doing it. But again, it's kind of a personal decision.
Appreciate that.
Mm-hmm. But you would always be looking for, and here's what I wanted, hopefully at some point in time, because I don't watch a whole lot of assets. You can kind of see from my favorite list what I do watch, but there are so many different coins out there, right? So like I've been knowing New York for a long time, and if he was looking at this and he just happened to be watching Bonk coin, right? Let's just pull up Bonk and look. Let's see what it looked like. I just put something random. So we'll say Bonk coin. What is this motherfucker looking at? So we'll look at Bonk coin. So, and this is weekly and it's new, so I'm gonna go down to a daily. So let's say, for instance, New York is a Bonk fan and I'm not, right? But New York has his 19 chart up. What I was hoping we could do as a 19 community at some point is if you have a coin that you're watching and I'm not, just send the group the signal that, man, I'm recovering here with a cross, right? And you might need to be looking at Bonk. Because even if I don't buy Bonk, I can see this setup and say, hell yeah, let me drop some bread on this motherfucker because it's recovering this trend, right? And this crosses are crossing, and I can witness this and grab me something off of Bonk. But I may not see all this because I'm not going to watch every asset, and I'm not going to fool myself into thinking I am. But when I see these, particularly 19 crossing back over the 100, I'm like, yeah, hell yeah. Make sure you alert me to these moments. And as a 19 team, we could, as a team, make sure that we don't miss out on these opportunities because there's no situation where it's not going to be advantageous when these things happen.
I like that idea.
Well, I was supposed to roll my blunt about 59 minutes and 11 seconds ago. It never did. But man, I appreciate y'all coming in, and I do hope that some of this information resonates with y'all and helps out. It'll probably be up on my YouTube channel for other people to kind of come through and look at as well that weren't actually here. So if y'all want to recommend it or whatever, it'll be archived there. But yeah, I just wanted to make sure I jump on because, again, there's been some interesting price action today and know a lot of conversation about ETFs and is 39 back on the table? Are they setting us up for exit liquidity? All of these different questions. And my chart just sits over here, accurately identifying all this so that you don't have to guess. So even like on this daily chart, we see that it was holding support well above the 3 and everything's still lined up. That's telling you day by day, we're still in a very good uptrend. So even if I were to work down backwards through these time frames, and I'll just go 3 hour, 3 hour tells us that over the next 3 hours, we still have some upside because we're still above barely above the 3, but let's see, probably a little bit under it. Fighting with it nonetheless, right? So if we start getting the angle down there, we could say over the next 3 hours between 9 times 3, 27 hours, right? You should get a recovery. So this is almost a day's range. Now let's work down a little lower and see how consistent that works out, right? So over here, we're sitting on this 9, right? 3. So over 3 hours to 9 hours, we're catching support, right? But everything's looking healthy even as we walk backwards in time. And if we went all the way down and say 15 minutes, back over on this little crazy thing that we were looking at earlier, your 3 looks like it's trying to get this support off of this 19, which would be great. If not, it's going to continue to the downside. But yeah, you got 15 times 9 right now, potentially going down, and right at your 19, you're flattening out. So 15 times 9 would give you kind of your support range. So everything's still looking healthy pretty much. I mean, even on these very low time frames, you got your most major support here. So if something went wrong overnight, this would be kind of area I would be looking for even a real big dip, about 59.6. And then I'd be looking for, is 19 going to cross that? And that would be a signal of something giving us lower price ranges. But people always like to get in these areas and then say, well, is 32 on the cards? And I'm like, no, 32 it can't be on the cards until I start losing some of these things. So can we at least put 32 aside until we lose 59? Like, and this is why I be saying the things that I say in spaces, because people will say, well, my chart's showing me that 39's on the table. And I have to tell y'all, you know, in all candor, that they're full of shit, because the chart's just not telling them that. It's their interpretation of information that's telling them that.
Appreciate you, man. I gotta step out though.
Nah,
Appreciate
man,
you,
it's been
guys.
good. I'm gonna go on ahead and close it down so I don't make it too long either. But I appreciate you coming through, brother. I appreciate you coming through as well.
Cash, I appreciate the shit out of you, man, and I'm gonna share it. You know what I mean? And yeah, let's get this money. Roll that blunt, by the way.
Yeah, man, I'm finna twist that motherfucker up, bro. So yeah, I appreciate y'all for sure, shit show. And like we said, let's keep getting this money, helping other people out, and hey, it'll be a good journey, man, as we continue going forward. I'm sure it's a moment in time we'll all sit back and enjoy these days.
Amen.
One, y'all
Be
have a
safe,
good one.
brother.
All right, well.